Hello, this is Patrick. Welcome to Chart Built Wealth, Profitable Investing with Technical Analysis. Well, I wanted to give a new buy recommendation tonight. Um, First of all, I did go from a buy to neutral on shorting the 20-year Treasury. We went to a buy rating on that back in November. We held it about 3 months. Was only up 1%, but got a 3.8% dividend. Just a quarter of that because it paid a monthly dividend. But for 3 months, if you annualize that, it's not too bad for a fixed income investment. This buy recommendation will be my eighth buy recommendation that I have outstanding, which is pretty normal for me. And today, again, another great day. The iShares commodity index up, up. You should have been selling some. Chevron up, I believe over 2% again today. You should be selling some on those up days. Brazil up over 2% today. You should be selling some of those, selling some of that. Uh, the healthcare had a outside day, a very bullish development right at support. That's a place you could be buying. The Saudi Arabia ETF was pretty much flat. I think we're down slightly in that, but it was only recommended a few days ago. KWEB, KWEB, the Chinese internet ETF is down, I don't know, 8 or 9%, but I still think it looks good long term. And today I'm going to initiate on India and the India Equity ETF, INDA. So with that, let's get into it. You can tell that a lot of the buy recommendations are outside U.S. equities, and it's been the place to be. It definitely have outperformed the U.S. market in a huge way. And India is one that I think is poised to do that also. And so this is a chart of India in 2023 in a huge bull market for, a year and a half, went from 37 to 59. What is that? About a 65% gain. You're not going to see that in the US market. Um, and then you can see as it hit all these higher highs, we got lower highs on our relative strength index. That's flashing a caution sign. Beware a change of trend is coming from up to down in this case. And then we traded sideways. Initially down, but have traded sideways, and that's a sign of strength. It's not a correction just down, it's sideways. It's working off this overbought condition. And so we have a nice consolidation for, I would say, close to 18 months. And while it's not intact yet, because it has to break above 55 to put this pattern in place, it is had a huge up week last week. And you can see this big volume bar. So somebody was in buying in a big way, and you like to see that. These other two big bars were on sell-offs during the week, and then by the end of the week, it had recovered. So this looks pretty good. Why am I recommending this today since we haven't broken out above 55? Well, let's take a look at the shorter term time horizon. Again, I say this frequently, when you have tight consolidations like we had in platinum, like we had in uh, MP resources, like we had uh, in many different holdings, I like to buy them before they break out. Sure, there's a little bit more risk, but when these things break out, everybody and their brother jumps on it, and you can see a 10% gain in one day, and then you got a lot of risk up here because you know your support is below the breakout of this pattern. So I like to buy it before. I think my reward to risk is better. So let's take a look at the shorter term daily chart where each one of these bars represents a day. This goes back, I don't know, 6 or 7 months. And what we have is here's the big update that we had a couple of days ago, a few days ago. And now we've had a little bit of a pullback. And what I'm seeing here is a rainbow convergence, a convergence of moving averages, which is uh, and actually, prices are coming back to that convergence, which tells me, for people that have listened to me for a while, that this is a type 2 convergence. And if it holds, it promises a new higher high, which is no big deal because here's the previous highs. So, but this is support for us. So if it breaks this, I know I don't want to own it. Um, that would be that would tell me that the trend isn't up anymore, that it's reversing and going lower. So I'm going to give it a little bit of room. I'm going to put my stop down here at 52.5. So that's about $1 risk, which is less than 2%, and the potential gain, which I didn't cover. I'm sorry. Uh, if it breaks above 55, we have a 67 price projection, which is about 20% higher. So for 1% in risk, potential 20% on the upside. So this is where I'm at. This is where I'm suggesting buying it now. Don't buy it after it goes up 5% because then you got a lot more risk. I'd be buying this now. Thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Please like and subscribe. Give me your comments, your feedback. I know it's not the most polished YouTube channel. I will get there eventually when I have some time. Thanks for watching. Have a great evening.